So friends, welcome back to CAP classes. So we are discussing about independent auditors report as per SA 700. So we have completed that, and we also learned a lot looking at Reliance Industries audit report. And another thing is there is a quick summary of the basic elements of the audit report. So I am reading it out. Remember one very important thing. In the examination, they might ask you what para should come after what para. Then this is very interesting. For example, say there are some key audit matters. So this is key audit matter. Okay, this is key audit matter where the key audit matters should be reported in the independent auditors report as per SA 700. You should be able to figure out that it is under basis for the report and above responsibilities of management. Now look at 7th point, basis for opinion. Basis for opinion. Then what is the below one? 9th one, management's responsibility. You should be able to write it. International courses, they ask this more. In Indian courses, they ask this less. But at times in MCQ, they might ask you, the auditor wants to report this as key audit matter paragraph, where it should be included in the independent auditor's report. So you should remember the sequence also. So what is the sequence? 1 title, 2 addressee, 3 opinion section, 4 identification of entities financial statements, 5 a statement that auditor is independent as per the code of ethics, 6 where applicable a section about SCA 570 going concern, 7 where applicable basis for qualified or adverse opinion section that addresses and is not inconsistent with the reporting requirements of SCA 570. That we'll discuss after a few minutes in 705. Then where applicable a section that includes information required by SCA 701 KAM key audit matters. 9 a description of management's responsibilities. 10 a reference to standards on auditing and law or regulation and description of auditor's responsibilities. What is 9th point? Management responsibility. What is 10th point? Auditor responsibility. Then signature, then place of signature, then date of signature. That's all. You understand? So the next standard is SCA 701 key audit matters. SCA 701 key audit matters. Okay, so let us quickly run through this. In the previous lecture, we have discussed something about KAM. In this lecture, very briefly we'll see. Let us not spend more time on this because very important area 705, 706 are pending. So, we will do 705, 706 also. That is the reason 701, we should do it fast. Read the objective from the board once. Point number 1, transparency. Point number 1, transparency. Point number 2, the matters in the auditor's professional judgment are the most significant, as I told you already, most significant in the current year, financial statements. That I want to bring it to them. Then, definition of KAM. They might ask you, what is the definition of KAM? Read this carefully. Those matters in the professional judgment of the auditor were of most significance in audit of financial statements of the current period. Then important, from where KAM will be selected? KAM will be selected from the matters communicated to those charged with governance. Okay, so I told you already. Again, I am telling you this one more time so that it will be printed in your mind. Look here. These are audit findings. These are audit findings. Do I need to put all the audit findings in my audit report? No. No. For example, on voucher, some cancellation is there. Explanation is to be obtained. It is explained. One bill is missing. It's to be obtained. Then accountant has given you the bill. These kind of things will not go to audit report. No. So these are audit findings. So all these audit findings, you have communicated to the management, to the appropriate level of management. So whenever you feel this is to be communicated, you have communicated to the appropriate level of management. Then auditor thought, out of all these things, these are significant. So these items will be communicated to those charged with governance. So what is that big box? That big box is matters communicated to management. What is this green color box? These are significant matters communicated to those charged with governance. From this I have identified this. From this I have identified this. And out of the matters communicated to those charged with governance, these 5 matters are, in my opinion, in my professional judgment, they are the most significant items to be communicated to shareholder. If I am not communicating this to shareholder, this is injustice. There is no transparency. Shareholder will never come to know this. That is the reason I want to communicate this. Okay. Now, so basically CAM will be taken from the matters that are communicated to those charged with governance. Scope. This is important. Examinable. In exam they can ask you, Pavan sir, there is one particular item where you have to qualify the audit report, where you have to give adverse report. Will it be enough if you highlight that in CAM and you do not modify the report? You will not give qualified report, you will not give adverse opinion, but you will highlight it in CAM. Is it enough? No. Not enough. Going concern SA 570. If I do not mention separately in SA 570 para, if I give it in CAM, is it enough? No. So remember, CAM is not a substitute. So what you need to highlight? Highlight this. CAM is not a substitute. Is not a substitute. Is not a substitute. Is not a substitute. You understand? CAM is not a substitute. For disclosures in financial statements, for reporting on going concern, for modifying the audit opinion, and a separate opinion on these matters will not be given. For example, you have seen in Reliance Industries capitalization of 1,13,300 crore rupees of property, plant and equipment items, additions to PPA. Will I give extra separate opinion on that? No. I am highlighting the matter, but my report will be overall on the financial statements. I cannot give report on one specific matter, even if it is important. That is against audit. You cannot do that. So then comes the applicability of 701. Then comes the applicability of 701. It is applicable to listed entities. So look here, it is intended to address both the auditor's judgment as to what to communicate in the audit report and the form and content of communication. Choddo. Applies to general purpose financial statements of listed entities. There are 3 circumstances. Point number 1. In case of listed entity, I will give CAM. In case of listed entity, I will give CAM. Point number 2. Pavan sir, there is a company which is not a listed company. There is a company which is not a listed company. But in the professional judgment of auditor, it will be good, beneficial to the shareholder if this is communicated, if this key audit matter is communicated to them. Can I include CAM in my audit report? Yes. There is no prohibition. If the auditor wants to include CAM, even in case of unlisted company, the auditor can communicate. 3. Sometimes management will come to you and management will ask, auditor sir, there is one most important thing. As you have rightly mentioned, could you please include this in your audit report as a CAM? Then auditor felt, yes, management request is genuine. Shareholder will get more benefit if this CAM is disclosed. Then also you can report on it. So there are three situations. One, in case of listed company, it is mandatory. Two, auditor's choice. Three, management requested and auditor felt okay. Sometimes there can be regulatory or legal requirements. If regulatory legal requirements are there, then you have to include. So look here, listed entities. Two, circumstances when the auditor otherwise decides to communicate the CAM in auditor's report, required by law or regulation to communicate CAM in auditor report. However, CA 705 prohibits the auditor, important, communicating key audit matters when auditor disclaims an opinion. Very important. When you are giving a disclaimer, auditor is giving disclaimer. Auditor is giving disclaimer of opinion. Then don't give CAM. Why, sir? Boss, you are not giving any report on the financial statements. How can you give CAM report? When you are not giving any opinion. What is disclaimer of opinion? Disclaimer of opinion means I am not expressing any opinion. When I am not expressing any opinion, I should not give any key audit matters. This is important. This can be asked in one MCQ. Under what circumstances CAM should not be given? A, clean report. B, modified report. C, B, qualified report. C, adverse report. D, disclaimer of opinion. Very important MCQ. You understand? Shall we go to next part? How to determine key audit matters? This also can be asked as a descriptive question. How a CAM will be identified? How the auditor determines CAM? And the beauty is, you need to write this in your report also. And the beauty is, you need to write this in your report also. How I have identified this key audit matter? So read that the auditor shall determine from the matters communicated with those. Same sentence, how many times they will tell, this is how standards are written. The auditor shall determine from the matters communicated with those charged with governance, those matters that require significant auditor's attention in performing audit. In making this determination, the auditor shall consider the following. What? 1. Higher risk of material misstatement. What is that? First one is higher risk of material misstatement. Like, do you remember in Reliance audit report what they said? In Reliance audit report what they said? There is capitalization of some items worth 1,13,300 crore rupees to property, plant and equipment. What is their problem? Their problem is there is a significant judgment involved in identifying the cost that can be capitalized, especially the cost incurred during the trial run. That could be 10,000, 20,000 crore rupees. So, auditor felt the risk of material misstatement is very high here. Auditor felt the risk of material misstatement could be high here. You understand? That is one. Second one, significant auditor judgment relating to areas in financial statements that involved significant management judgment, including accounting estimates that have been identified as high estimation uncertainty. I'll give you two best examples, okay? First one is, see, basically we are speaking about accounting estimates. So, what is this accounting estimate? Remember it like this, okay? Remember it like this. So, what is this? Okay. One second. So, what is this? The first thing you need to keep in mind is high estimation uncertainty. What is this? High estimation uncertainty in accounting estimate. So this is management opinion. Okay, this is management judgment. Now auditor has to judge the management judgment. So what is this? Auditor's professional judgment about management judgment about an accounting estimate which comprises high estimation uncertainty. Oh my God. You remember in Reliance Industries, litigation cost, fair value measurements, all these are estimations. No, provision is an estimation. When you create a provision for decommissioning cost, when you create a provision for, this litigation in case of any court cases and all these are estimations. Decommissioning cost is an estimation. What Reliance people said, they have spent huge amounts on that gas, that gasoline, whatever the project it is, gas, some base, they said. They estimated so many provisions and they capitalized it. Provision for decommissioning, that also they said. High estimation is there. Now, can management estimate it 100% accurately? Try to understand the definition of accounting estimate itself. The definition of accounting estimate itself. When there is no 100% clarity on the amount to be spent, it will be estimated. Now you asked management, dear management, are you 100% sure that the estimate is 220 crores? Boss, this is the best possible estimate. So now here one management judgment is there, one auditor judgment is there, and high estimation uncertainty is there. This item is a KAM. This is second one. Third one, the effect on audit of significant event or transactions that occurred during the period. So it could be in the professional opinion judgment of the auditor, the effect on audit of significant events or transactions that occurred during the period. This is a general sentence. So what is the first one? High assessed risk of material misstatement as per 315. Second one is accounting estimates. Third one is significant events or transactions. Okay, it could be amalgamation. Okay, something like that. So these are the 3 points. After that, communicating KAM. This is also important from exam point of view. The introductory language in this section of the auditor's report shall state: A. Key audit matters are those matters that, again same language is coming, that in the professional judgment were the most significant in audit of financial statements of the current period. And B. These matters were addressed in the context of audit of financial statements as a whole and in forming the auditor's opinion thereon. And important, auditors does not provide a separate opinion on these matters. Simply because 1, 2, 3, 4, 5 key audit matters I am telling you, don't expect separate opinion from me. My opinion on financial statements is a single opinion on the whole financial statements. But I want to highlight this, I am highlighting. Don't expect another report on this. This is all. Key audit matters in audit report, important from exam point of view. So this is 701. Now shall we go to 705?